Hello students, welcome to Mr. TK classes. Today we are doing session 2 of FAC 1502 mock exam, and this is question 11. Question 11 reads, the following information pertains to wooden house traders, and this is the information. Alright, the requirement, the amount for depreciation in the statement of profit or loss and other comprehensive income of wooden house traders for the year ended 28th February 2020 will be. Alright, so we need to calculate our depreciation for question 11. Alright, so let us look at the depreciation policy. Provision for depreciation must still be provided for on vehicles at 20% per annum on the diminishing balance method, right? And on furniture and fittings at 10% per annum on the diminishing balance method. No assets were acquired or disposed during the year. This will make our question very easy because no assets were acquired or sold during the year. All right, so we first we need to know what is diminishing balance method depreciation. So we are going to define diminishing balance method here. Diminishing balance method, let me just write diminishing balance method. So diminishing balance method is also called reducing balance method, and it is also called declining balance method. So when you are using this method, you always have to know that depreciation is calculated on cost in the year of acquisition. Depreciation is calculated on cost in the year of acquisition. And on carrying amount in the subsequent years. Okay. Then the other method that students always confuse diminishing balance method with is straight line method. You need to know the differences between the two so that you can make necessary calculations. Straight line method. With this method, depreciation is calculated. With this method, depreciation is calculated on cost. Depreciation is calculated on cost. So you just have to know that always depreciation is calculated on cost when using the straight line method. Alright, so now let us go to our question and make the calculations that are needed. Alright, which assets do we have here? We have vehicles. So we are going to say vehicles. Alright, vehicles. And which policy are we using again? We are using diminishing balance method for both, right? Then vehicles, we are using 20% per annum. And alright, so we are going to say 20% per annum multiplied by. Alright, so when you are using diminishing balance method, remember I said depreciation is calculated on cost in the year of acquisition and on carrying amount in the subsequent years. So is this the year of acquisition? No. Why? Because there is accumulated depreciation already here. The asset has depreciated before, so it's not the year of acquisition. This asset was bought some time ago. So we are going to calculate the carrying amount by saying cost of vehicles is 375,000. Subtract the carrying the accumulated depreciation of vehicles, which is 187,500. What do we get? 187,500. Okay, so when you get this, you are going to multiply by by 20%. You're going to multiply by 20%. You're going to get that 7,500. Then we move on to the next one, furniture and fittings. Furniture and fittings. So we are going to say furniture and fittings. Furniture and fittings. All right. We are still using diminishing balance method, right? But now furniture and fittings we are using 10%. So we are going to say 10% multiplied by, we are going to say 10% multiplied by, let's calculate the carrying value. Let's calculate the carrying amount. All right, so we're going to say furniture and fittings at cost 45,000. 45,000. Again, say 45,000 subtract accumulated depreciation of furniture and fittings 22,500. 22,500. So we are going to get 22,500. All right, then 22,500 multiplied by 10%. 2,210. 2,250. All right, so we need to add these two. We need to add these two. Let me just say is equals to. We just need to add these two. 2,250 plus 37,500. We are going to get 39,750. 39,750. So 39,750 is our answer. 39,750 is our answer, and that's option B. That's option B for number 11. Then now let's go to number 12. Number 12, the following information pertains to wood and house traders. This is the information. The amount for finance costs in the statement of profit or loss and other comprehensive income of wood and house traders for the year ended 28th February 2020 will be. Alright, so number 12, we need to do finance cost. Number 12, finance cost. Alright, so let's check our information. I can already see interest expenses here. This is our finance cost. But now this is the one that was paid. We are not really sure whether the amount that was paid was the amount for the year. All right, now let's see. Interest on long-term loan at a rate of 10% per annum is payable every 3 months. Okay, is at a rate of what? 10% per annum. All right, and what is our long-term loan? 225,000. 225,000. All right, so that's our long-term loan. And here they are saying it's payable every 3 months. Ignore this because they are telling you that it is being paid every 3 months. But we are calculating our interest for the year, right? Then this one on 28th February 2021, an amount of 25,000 is repayable on the loan. They are just telling you that 25,000 is no longer part of non-current liabilities. It's now part of current liabilities. Why? Because it will be repaid in a year's time, right? So it is going to be a current liability. But then ignore it on this calculation. You just need the full loan amount and you multiply by our percentage. And this loan was available for the whole year. So we are going to say 225,000 multiplied by 10%, 22,500. That's our answer. 22,500. That's our answer. So now we go to our options. 22,500. That's option A. That's option A. All right. Now we move on to number 13. The following information pertains to wood and house traders. This is the information. The amount for interest income in the statement of profit or loss and other comprehensive income of wood and house traders for the year ended 28th February 2020 will be. All right. So this is number 13. Number 13, we are calculating interest income. Number 13, we are calculating interest income. And interest income is going to be easy because we are looking at what generates income for us. So fixed deposit is the one, and the amount is 60,000. The amount is 60,000. Now let us see how we are going to calculate our interest here, the interest that we should be receiving. The interest that we should be receiving. All right, so money was deposited in a fixed deposit account at Splinter Bank on 31 December 2018 for only 1 year. All right, it was deposited when 31 December 2018. This was the end of the previous financial year, right? For only 1 year. All right, on 31 December 2018. No, it was not the end because our year is ending 20th February each year. All right, okay. On 31 December 2019, when the investment matured, only 40,000 was invested again, right, for another year. So what we know, let us, once they are telling us the amounts in pieces like this, we need to split 40,000. That's the first one, which means the other one, which means the other amount, which means the other amount. Let's see. The bookkeeper only made entries in the books of Wood and House Traders for the 4,000 that has been received and invested again. No other entries were made for the other 20,000 that was received but has not been invested again. Interest at a rate of 8% per annum must still be provided on the fixed deposit. Alright, what we already know is 8%, right? Multiply by 8%. Alright, let's go down here. The other amount is 20,000. Right, we already know that we are going to multiply by 8%. Alright, so 40,000, what they are saying about 4,000 is that on 31 December 2019, when the investment matured, so this investment matured during the year, right? It was made in the previous financial year, but now it matured during the year, right? When the investment matured, only 40,000 was invested again. So 40,000 was there for the whole year. This 40,000 was there for the whole year because it was matured again. It was invested again for another year. Then the other 20,000, the bookkeeper only made entries in the books of Wood and House Traders for the 4,000 that has been received and invested again. No other entries were made for the other 20,000 that was received but has not been invested again. This one was not invested again, which means it was only there from when our year started. If a year is ending 20th February 2020, it means it started 1 March 2019. So if our year started 1 March 2019 and this matured on 31 December 2019, how many months are they? We are going to count March because it was a full month, right? March, April, May, June, July, August, September, October, November, December. So that's 10 months. We are going to say multiply by 10 over 12. What do we get? Alright, so for the first one, we are going to say 40,000 multiply by 8% multiply by 12 over 12. 3,200 for the first one, 3,200. Then the second one, 20,000 multiply by 8% multiply by 10 over 12. We get 1,333. 1,333. So now let's add these two. Let's add these two. Let's add these two. Alright, so we are going to get plus 1,333. We are going to get 4,533. 4,533. Then we go to our options. 4,533. D for number 13. D for number 13. D for number 13. Right, then we move on to number 14. We move on to number 14. The following information pertains to wood and house traders. This is the information. What will be the amount of property, plant, and equipment in the statement of financial position of wood and house traders as at 20th February 2020B? Alright, so you know that when we are calculating our property, plant, and equipment, we add the carrying amounts. So let us, alright, let me just write a shortcut here. So let us calculate the carrying amount of vehicles. Right, this will be our first one. Vehicles, the carrying amount of vehicles. So you know that when you're calculating the carrying amount, we say costs subtract accumulated depreciation. So our vehicles, the cost of our vehicles is 375,000, right? And here we are going to subtract accumulated depreciation at the beginning, 187,500, right? Then we also have to subtract depreciation for the year, because if we subtract accumulated depreciation at the beginning, it means the carrying value that we are going to get is at the beginning, of which we want the carrying value at the end as at this date. So now, what is our depreciation for the year? Because it is as if it is assumed that the depreciation for the year ended 20th February 2020 where vehicles 75,000. Let's subtract 75,000, which is our depreciation for the year. Alright, what do we get then? 375,000 subtract 187,500 subtract 75,000. Get 112,500. 112,500. Then furniture and fittings. Furniture and fittings. Furniture and fittings. Furniture and fittings. Alright, so furniture and fittings, we are gonna do the same. Furniture and fittings, we are gonna do the same. The cost of furniture and fittings was 45,000, right? Subtract accumulated depreciation at the beginning. Furniture and fittings, which is 22,500. Subtract depreciation for the year, so that we get our carrying amount at the end of the year, 4,500. Okay, so what do we get here? What do we get here? We are going to say 45,000 subtract 22,500 subtract 4,500. We are going to get 18,000. So now if we want to get the carrying amount, we should now if we want to get the property, plant, and equipment, we should add these two carrying amounts, 18,000 plus 112,500. We are going to get 130,500. All right, 130,500. That's option C. That's option C for number 14. That's option C for number 14. So we move on to number 15. We move on to number 15. We move on to number 15. All right, so number 15. Number 15. The following information pertains to wood and house traders. All right. The amount of cash and cash equivalents in the statement of financial position of wood and house traders as at 20th February 2020 will be, all right, cash and cash equivalents, cash and cash equivalents, cash and cash equivalents. So under cash and cash equivalents, we have to know that these are the things that will be under cash and cash equivalents. We will be having bank, right? Bank So if we have bank, we have to add, right? This is a favorable balance that we are talking about. If we have cash float, we have to add. If we have petty cash, we have to add. If we have savings account, we have to add. If we have bank overdraft, we have to subtract. All right, so we are looking for these things. We are looking for these things. We are looking for these things. All right, let us go to our information. All right, I can see bank favorable for 9,500. Do we have some of these things that we have listed here? All right, I can't see any. Let us check in the additional information. We might be having something that affects our bank balance there. All right, during the year, a debtor owing the business 7,500 was declared insolvent and his account was not written off immediately. Later, during the current financial year, 3,000 was received from the administrator of the debtor's insolvent estate. Okay, how much was received? 3,000 was received during the year, and this is under additional information. So though this information was not known when the balances were drawn up. Okay, all right, we move on, we move down, we go down. All right, I remember something about the fixed deposit. Money was deposited into a fixed deposit account at Splinter Bank on 31 December 2018 for only 1 year. On 31 December 2019, when the investment matured, only 4,000 was invested again. So if an investment matures, you get your money back, right? So 4,000 was invested again. So we got it back, we invested it again. All right. Then the other 20,000, no entries were made for the other 20,000 that was received but has not been invested again. No entry was made for this 20,000 that was received. So we have to add it under the bank account. Now let's do our calculations and see what we get there. For 9,500, for 9,500 plus 3,000 plus 20,000, get 72,500. 72,500, 72,500, that's option B. 72,500, that's option B for number 15. That's option B for number 15. All right, then number 16. The following information pertains to wooden house traders. This is the information. This is the information. Okay, the requirement. If you assume that the total loss for the year is 100,000, what will be the amount of total equity in the statement of financial position of wooden house traders as at 20th February 2020B? All right, so now this is number 16. Number 16. We are calculating total equity. We are calculating total equity. We know that when you are calculating total equity, we start with the equity that the business had at the beginning. All right, which is capital at the beginning, 325,000. Right, and you know that drawings reduce our capital. When you are taking money out of the business, it means you are taking your capital out of the business. 75,000, it reduces capital. Then we had something about a loss down here. If you assume that the loss during the year is 100,000, so if you make a loss in your business, it means your capital is decreasing. Your capital is decreasing. If you make a loss in the business, your capital is decreasing. All right, then do we have any capital additions here that happened during the year? Okay, on 1 October 2019, the owner deposited 50,000 cash into the business bank account, or into the bank account of the business. The bookkeeper was not sure the account that would be affected by the transaction, and he only recorded it in the bank account. This one was recorded in the bank account. but the other account is the capital account because the owner injected more capital into the business. So the bookkeeper was not sure which accounts are affected. So the bookkeeper was only sure about the bank. The bookkeeper was only sure about the bank. All right, where is the information again? I just want to see if the entry that was made in the bank account is correct. The bookkeeper was not sure of the account that will be affected by the transaction. He only recorded it in the bank account. All right, since they didn't tell us whether the bookkeeper debited or credited, we are going to assume that the bookkeeper debited. All right, then 325,000 subtract 75,000 subtract 100,000, right? Plus 50,000. What do we get? 200,000. Get 200,000. Okay, 200,000 is our answer for number 16. 200,000 is our answer for number 16. That's option D. That's option D for number 16. That's option D for number 16. So now let us move on to number 17. Let's move on to number 17. The following information pertains to the house traders. All right, it's the very same information. The amount for non-current liabilities in the statement of financial position of food and house traders as at 20th February 2020 will be non-current liabilities. Non-current liabilities. I remember saying something about non-current liabilities. So now we move on to number 17. We move on to number 17. We non-current liabilities. Non-current liabilities. Non-current liabilities. So our non-current liabilities, remember we have a long-term loan. We have a long-term loan here, 225,000. And this long-term loan of 225,000, they said something about an amount that is maturing, an amount that is being repaid, an amount that is being repaid in less than a year's time. Interest on the long-term loan at a rate of 10% per annum is payable every 3 months. On 20th February 2021, an amount of 25,000 is repayable on the loan. Okay, I want you to see something here. The end of our financial year is 20th February 2020, and this is going to be repaid on 20th February 2021. So you see, it is a year's time from the financial year end date, which is 20th February 2020, which means that 25,000 is no longer non-current liabilities. Why? Because it is going to be repaid in 12 months. So if you have a liability, then some part of it is going to be repaid in 12 months or less. You remove it from non-current liabilities. It is going to be current liabilities. It is going to be current liabilities. If there's a question that you ask about the 25,000, you add it under current liabilities. All right, so was it the only one? Was it the only one there on number 16? Was it the only one there on number 16? Was it the only one there on number 16? Okay, let's see. Was it the only one there on number? Now we are on number what? 17. All right. Was it the only one there on number 17? On number 17. All right. Let's see. All right. Yeah. So option A, number 17, option A. Number 17, option A. All right. We move on to number 18. We move on to number 18. If a member gave a club refreshment worth 600 instead of membership fees for the same amount, what will the entry for this transaction be in the books of the club? Okay, let's go to number 18 here. So number 18, what happened? A member gave a club refreshment worth 600. So we know that refreshments refreshments, right? Refreshments are expenses, right? Are expenses. And expenses have a debit balance. They increase on the debit side and decrease on the credit side. All right. Then the other account that is affected, they said instead of membership fees. So this person was paying membership fees, and membership fees account is an income account. It decreases on the debit side and increases on the credit side. So what we are going to have at the end is that refreshments, we are going to debit the refreshments, right? Then we will credit membership fees. Okay, we are going to debit refreshments, which are our expenses. To recognize this expense, then we also have to recognize this income, because what happened is the person paid the expense, but we should see the income, because the person paid the expense instead of giving us that money as an income, then we use it to pay the expense. So now we are going to say we are looking for something that to debit refreshments and credit membership fees. Debit refreshments and credit membership fees. That's option B for number 18. That's option B for number 18. That's option B for number 18. Then now we move on to number 19. We move on to number 19. The following information pertains to Mike's Tennis Club, a small tennis club for children in Soweto. Right? Extract from the list of balances at 31 December 2019. All right. What are we required to do? The amount for membership fees that needs to be transferred to the income and expenditure account on 31 December 2019 will be. All right. So it means we need to do the membership fees account. 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 Okay, we need to do the membership fees account. So we are going to do the membership fees account in respect to this question. We are going to do the membership fees account in respect to this question. All right, so this is question 19. This is question 19. This is question 19. This is question 19. Right. So question 19, we are going to do the membership fees account. Question 19, we are going to do the membership fees account. We are going to do the membership fees account. Question 19. We are going to do the membership fees account on question 19. Okay. So we are going to say 19 membership fees account. All right. This one is an income account, so we have to know that it increases here and it decreases here. It is an income account. All right, so let us look at entries that will affect this. Let us look for entries that will affect that amount. So we are going to say entrance fees and donations must be capitalized. Membership fees were 100 per annum in 2018, 120 per annum in 2019, and will be 140 per annum in 2020. When you have something like this, we need to know our financial year. So let me come here and say financial year, right? Our financial year is starting from 1 March 2019, 1 March 2019 to, because if our financial year is ending 31 December 2019, it means it started, oh sorry, it didn't start 1 March, it started 1 January 2019, because it is ending in December. to 31 December 2019. Okay, our financial year is straightforward. So now we need to use this timeline to know what to post and where. All right, so we are going to say membership fees were 100% per annum in 2018, 120 per annum in 2019, and will be 140 per annum in 2020, right? And our year is 2019, right? Okay, let us also see if there is anything that will affect what we have here. Entrance fees, bank charges, donations received, going down, honorarium. Membership fees received 9,360. Okay, I want you to see a bank account in your mind. If you receive the bank account is going to increase, right? If you receive money, the bank account is going to increase. So if a bank account is increasing, it means you debit the bank account. So the corresponding entry will be in the membership fees account. You are going to credit, because in the bank account you are debiting, the bank account is increasing. So the corresponding entry is going to be in the membership fees account. And the other reasoning that you use is that membership fees account is an income account. So when we receive, it means that our income is increasing with 9,360. So now for the other entries that you are going to make, let's say for instance, if what we have received is let's say this 9,360 is not all the money that we should have received. It means that we will end with an accrual carried down. I'm avoiding writing balance carried down because I want to write something that will make you remember always. We have an accrual carried down. Let's say what we have received here is not all the money that we should have received. It means we end up with an amount that will be owing here. So let me come this side. If bank is coming here, it means income and expenditure will come this side. Income and expenditure will come this side. Income and expenditure will come this side. So we are saying this is the bank. This is what has been paid. Let's say what has been paid is not the amount that should have been paid. There will be something short, and that amount will be written here as accrual CD, right? I'm just let me just write a random amount to make my point here. So I'm going to remove it. Let's say the income and expenditure amount is 10,000. Then we just received 9,360. It means there's something that should come here, and it's the difference between 10,000 and this. So it means if we didn't receive everything, it means the rest is outstanding. That's why it's accrual CD. It comes here, right? So I'm going to remove this because this amount is not there. We are going to get it as a balancing figure, right? Okay, so if accrual CD comes here, it means that prepaid carried down comes here. Prepaid carried down comes here. So it also means that accrual brought down comes here. Accrual brought down comes here. It also means that prepaid brought down comes here. Prepaid brought down comes here. All right, so now let us look at what we are given. Membership fees were 100 per annum in 2018. Okay, in 2018, which is the previous financial year. 120 per annum in 2019, which is this financial year. And will be 140 per annum in 2020, which is the next financial year. All right. On 1 January 2019, the membership fees of 5 members for 2018 were still due. 2018 is the previous financial year, right? which means if they were due on 1 January 2019, this is accrual brought down. We brought it forward to this year. So we are going to say for how many members? For 5 members. 5 members multiplied by 2018 fees. Membership fees for 2018 were 500. So multiply by 500. What do we get? Membership fees for, all right, membership fees, sorry, we have 5 members. Okay, 5 members multiplied by membership fees for 2018 were 100, right? So it means here we are going to get 500. Okay, then what is the next statement? An amount of 120 was prepaid by members on 31 December 2018. So if it was prepaid on 31 December 2018, it means that's what we were having at 1 December 2019, right? So we are going to say an amount of how much? Of 120. An amount of 120. Then on 31 December 2019, 4 members paid their membership fees for 2020. On 31 December 2019, right? 4 members paid their membership fees for 2020. What does this mean? This is prepaid. This is paid in advance because this they were paying for 2020, and remember current financial year is 2019. So if they were paying for 2020, it means it's prepaid or it is paid in advance. And how many members are they? There are 4. And what is 2020 membership fees? 140 per annum, right? Multiplied by 140. What do we get? We get multiplied by 140. We get 560. We get 560. Get 560. So this 560. Okay. Let us go on with our information. On 31 December, or this is the one that we're doing just now, membership fees received during 2019 included the membership fees of 3 members who did not pay in 2018, right? Of 3 members who did not pay in 2018, 3 of them. All right. The other 2 members must be written off as irrecoverable. So the other members should be written off, credit losses, right? Remember, we are writing off an amount that is here. So we should record on the credit side. We should record on the credit side because we are writing off an amount that is on the debit side. So we are going to say membership fees received during 2019 included the membership fees of 3 members who did not pay in 2018. The other 2 members must be written off. All right, 2 members multiplied by 2018 fees. 2 members multiplied by 2018 fees, because remember we're talking about 2018 fees here. 100. So what are we going to get? We are going to get 200. We are going to get 200. We are going to get 200. Then let's go on. On 31 December 2019, 2 members membership fees for 2019 were still outstanding. All right, 2 members again, their membership fees for 2019 were still outstanding. Now that's accrual carried down. So let us come here and say 2 members multiplied by 2019. 2019 is 120 per annum, multiplied by 120, we get 240, right? 240. All right, so now let us add and see. So we are going to add there. We are going to say, because now this is inventory on hand of tennis balls, going down. Okay, if we need anything, we'll just refer to the question, because I can see. All right, 120 plus 9,360 plus 200 plus 240, that's 9,920. 9,920. 9,920. Okay, 9,920. So now let us subtract everything this side. Let us subtract everything that side. 9,920 subtract 560 subtract 500. What do we get? 8,860. 8,000 get 8,800. 8,810. 8,860. Okay, so this 8,860, let me just indicate it with 3 stars. That's the amount that we're looking for. Income and expenditure. Here, that's the amount that we're looking for. That will be transferred to the income and expenditure account. 8,860. So we look for it here. That's option B. That's option B. That's option B for number 19. That's option B for number 19. Okay. Then now, let us look at number 20. The following information pertains to Mike's Tennis Club, a small tennis club for children in Soweto. Alright. The amount for accumulated funds in the statement of changes in equity for the year ended 31 December 2019 will be. Alright. So now what we are doing here is accumulated funds. Accumulated funds, and this is number 20. Number 20, accumulated funds. All right, so we start with the accumulated funds amount. Where is it? We are going to say accumulated fund 1 January. That this was at the beginning of our financial year, right? 36,243. All right, so now we are going to add. Was it a loss that we're having? You may assume that the surplus for the year, after all the above adjustments have been taken into account, amount to 6,777. So this was a surplus. It will increase our accumulated funds, right? It will increase our accumulated funds. Then there was something that was being capitalized here. Entrance fees and donations received must be capitalized. Where are the entrance fees? Entrance fees 750. Let's capitalize. Right. Then what else? Donations. Where are they? Do we have any donations here? Do we have any donations received? 9,650. 9,650. Let's capitalize this. Okay. Then what do we get? What do we get? We are going to say 36,243. 36,243 plus 6,777 plus 750 plus 9,650. We are going to get 53,420. 53,420. 53,420. That's option E. That's option E. So our answer is going to be E. Our answer is going to be E. So this marks the end of this class and the end of this mock examination. Thank you.